The US dollar is higher versus three major currency pairs, continuing the trend seen since the FOMC rate decision last week, when the Fed was less dovish, saying that December is not on a preset course to ease rates. In this video, I'll take a look at the three major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective to kickstart your trading week. So let's get started. Looking at the euro versus US dollar, start on the hourly chart, and recall from last week the high prices that we saw here, and here all went up and tested that 100-day moving average. This was Wednesday, and the price fell sharply after the FOMC rate decision, taking the price below the 100 200-hour moving averages. And on Thursday, the price high, the corrective high off of that move, came right back up to the 100-hour moving average. Found willing sellers there, found willing sellers as a 200-hour moving average, and it was down on the Thursday and Friday into the close. Trading here today, we've seen a rebound. That rebound took the price up to the low of these. These two swing lows right through here. This was a double bottom here. This was another bottom right here. So we came right back up to the double bottom right here, and to the credit of the sellers who are leaning against that tactical level, they found willing sellers at 1.15414 and have since pushed the price march to the downside. That move to the downside has now taken the price to a new low near the 1.15 level. I'll take a look at that. What does that look like on the 4-hour chart? And if I look at the 4-hour chart and look at its move to the new lows here today, we also fell below this swing area going back in time between 1.1518, 1.1529. That is now closer risk. If you want to use the double bottom as risk, you can still use that as a risk as long as the price remains below these levels. The bias remains more to the downside. This would be a closer risk of move back above the 115.29. So where does that take us? It takes us into really nowhere's land. We kind of have an open road ahead. You might say that there might be some resistance or some support down here near these lows back here. Maybe even put that up to this corrective high right through here after we broke lower here. So this area right through here between 114.47 and 114.58, we're currently trading about the 115 level. So there's room to roam about 50-60 pips to the downside for this pair, as long as the price can remain below the 115.29 level. The bias remains more to the downside. So sellers are in control in that currency pair. Let's take a look at the dollar versus yen next. And in trading last week, we moved above the October highs right through here. That was on Thursday's trade, that move took the price up to a level, kind of a random level at 154.43, but the randomness of that level held on Friday as well, with the high price just coming in short of that level. So we found willing sellers against that level and kind of muddled our way into the close. And we're doing more muddling in trading here today, as you can see on this hourly chart. Not a lot of trading range here. Support and buyers. Support buyers are higher than the previous lows. Here, at the same time, the highs are lower as well. So the traders are looking for some sort of a break to the upside as we try to figure out where the next momentum play is going to be. What we do know from the break of this area right through here is that if the price were to go down, this area would be a clear support. It's also now defined by the rising 100-hour moving average. That's going to work its way higher and probably be the first target on the downside, major target on the downside from a technical perspective. You always need to get below the 100-hour moving average to show that the sellers are taking back more control. Like I did in the euro versus US dollar, take a look at the 4-hour chart to see where we're at in this move. And actually, you kind of got to go all the way back. Well, there we go. Go back to this way back here and take a look at these levels back in December and beginning of the year, that they come between 144.77 and 144.96. Those are the major targets on the top side, including this high right here, these lows right here, high right here, this low right here, and this low right here. All those levels come between 144.77 and 154.77 and 154.97 on the top side. Finally, let's take a look at the sterling versus US dollar. I'm going to focus on the 4-hour chart to kickstart this look. Why? Because we had a low right here, we had a low right here, we had a low right here in trading last week. And then the price ultimately broke through and closed well, close to that swing area on Friday. In trading here today, we moved a little bit above it and then rotated back to the downside. So the sellers are trying to make a play to the downside and also in the process testing this low price right through here where we found support buyers. As you can see, we're actually hot back higher, trading near above this 131.39 level. So the buyers are trying to make a play here in the pound versus US dollar. And if they could stay above this level, then things would be looking more positive for this pair. So this currency pair is trading right now near unchanged for the compared to Friday's trade, and trying to make a move to the upside in the pound, a lower move in the dollar. So one of those currencies that seem to be supported. The currency pairs, it seems to be supported. If we can stay above the 131.39 level, be more bullish. So there you have it. A look at the three major currency pairs. Kickstart your new trading day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.